I'm very excited to have Todd Teta. I was going to say almost for Teta, I said Teta, right? With us. And outside of saying, obviously I know I've known you for years, right. And, Chief Product Officer, Chief Technology Officer of Attom Data, which obviously is a parent company of many operations. We've been working with you guys for many years.
Yeah.
So Todd, instead of me trying to pretend that I can explain your bio, why don't you share with everybody your bio and the story of Data?
Sure. Yeah, so Todd Teta, Chief Product and Technology Officer for an Irvine-based company called Attom Data. And what we do is collect and curate data about the real estate market, about 500 different data sources, and then power companies like you guys to build products and touch consumers in the market. My history in this space goes back about 2 decades. I started my career in technology consulting and realized technology really can help business, which kind of seems silly now, but back then was just getting going at earnest in the kind of the new economy. So that's what I focused on. Worked with a number of the large real estate data companies, some here, First American, Black Knight, CoreLogic, others, and Attom is in that same bucket of type of real estate data company. So thank you for having me.
Thanks for coming. I think I want to jump right into the current state of affair, COVID-19, right? Mm-hmm. Actually, we're in 21, so think about COVID-19, 2020, 2021. And I don't think that, obviously the companies in our industries really were heavily affected, which obviously we feel blessed about that. But why is that in your opinion? Obviously being in the space that cultivates and studies data regularly, why do you think that we were not as affected by it?
Yeah, it's interesting because we did a forecast in March, April of last year, right when COVID started, and we had anticipated quite a bit of a downturn in the market. So as we got into the summer last year, we were incredibly surprised that the real estate market particularly had held up so well. And we got to mention, we're talking specifically residential, right? Other aspects of real estate have been hurt, commercial certainly. Non-warehouse industrial has been hurt, like manufacturing. So there are segments of real estate that have been, but squarely in residential, I think the actual type of pandemic we're having and the work from home scenario has created a lot of demand that didn't exist, or really pulled forward demand in my mind from 21, 22, 23. Where people said, let's execute on retirement plans early, or let's move remotely because our companies are allowing us to. And what we've seen in the data since May of last year is just the market has incredible demand and incredibly low supply. You put those together and it's, you can see what's happening with prices and people being outbid for every home pretty much now. And the market's held up incredibly well because of that.
So what do you see? You started to touch on this. What do you see in terms of data trends? What's happening in the market now, specifically in real estate?
Sure. Yeah. Well, the first one is what I mentioned, right? Supply completely under where demand is. So I did an end-of-year forecast in December with somebody that focuses on the new home market, and the new home market's building about half as many homes as they were during the last downturn. So you've kind of sucked out that natural supply that might offset, foreclosures coming into the market or other natural supplies natural sources of supply. So that's probably the number one. Demand is way through the roof because of mortgage rates. Supply is about half where it was coming into 2020. So, call it half as many homes on the market as we saw coming into 2020 with way more demand. So that's data point one. I think the other data point I just mentioned was mortgage rates, right? 50-year low, 60-year low, depending on which trend you're looking at or which type of loan you're looking at, and that's driving that demand side. We do believe that that's going to continue. Mortgage rates will continue to stay low, probably into Q3, maybe Q4. Depending on what happens in the new administration, but nothing to say they're going to go way up this year. So yeah, you kind of assume rates are going gonna drive demand for the better part of this year.
But what do you think about supply? Because, I mean, you think about it, right? I mean, sellers and mortgage affordability, and if the unemployment is where it is, and I mean, how long do you think homeowners can sustain the current economic situation?
Yeah. So this pandemic has hurt, and recession has hurt lower income folks a lot more than, traditional homeowners with equity. So you've seen rents not being paid, right? There's a lot of moratoriums on eviction that's holding those folks in their homes. Same thing on foreclosure moratoriums. If you happen to be a homeowner and have been hurt by this recession, you're guarded by a foreclosure moratorium right now. So those are sort of suppressing any sort of turnover in the market. So you're kind of asking, well, what happens when some of that ends? So we definitely do think foreclosures will go up later this year once the moratoriums end. And I won't say if, I say when, because they're absolutely going to end at some point. I just think the economy's got to get its legs back before the new administration takes the foot off the pedal on that. And that'll increase supply. So I think later this year, you'll start seeing a little bit of distress. And then because prices have gone up so much, we're fully expecting people to take advantage of the market, put their homes on the market, and you'll just get a natural increase in supply that way. So it's not going to outstrip the
So you think that prices are going to go down?
Yeah, we're anticipating the second half of this year is going to kind of flatten, very slight decline. I think our number that we kind of internally use is somewhere in the low to mid single digit appreciation overall, but most of that front loaded in the first half of the year.
Got it. So let me jump to like 180 from this, which is basically the data aspect of it, right? Because I mean, we're trying to forecast and we're trying to predict what's going to happen next, and obviously act based on the data. But there's been a lot of noise, a lot of issues and concerns around data in the last couple of years, and I mean, we just heard about Facebook and WhatsApp, or WhatsApp disclosed basically that they're going to have to share the user's data with Facebook, the parent company, and that created basically a run on the app instead of run on the bank, right? 100 million downloads on Signal and Telegram app, which are competing apps to WhatsApp. But that's just one thing. I mean, it's constantly happening again, whether it's the Europeans, whether it's here. Where do you think data, for lack of a better term, data mining regulation is going? I mean, do you think that 5, 6, 10 years from now you'll be able to predict the same, and function the same way with the data that data that is being regulated right now? Well,
I definitely think if you're in the business of holding consumer data, you're hotly regulated, right? So if you happen to have anything about household or consumer level information, you should be worried that, as a business, I should say, you should be worried that there's going to be more regulation, right? It's GDPR, CCPA, TCPA, whatever acronyms you want to throw on it, there will be more and more of that. And every time we have a breach, every time there's a big initiative or a big push for privacy rights, there's going to be increased regulation that comes out of that. What I make the distinction, this is just me and my head, probably more than anything, is there's a whole set of businesses that are connected to the consumer that are collecting a whole lot of data about consumer behavior, location, interests, disinterests, etc. That's one segment of data collection that I think is the most tenuous, if you will, and will lend itself towards, anonymization and better privacy for the consumer in the future, just as laws catch up. Where then there's a second bucket in my mind of companies that are collecting data, not necessarily at the household level or about consumers, or not as real time about it. I think those types of you think about like your credit report.
That's fine. I was going to ask that next question.
Yeah, exactly. So we can lead into this. It's you think about that. Right. You going and buying something at the store means you're in that store. You paid X dollars and you needed product Y at that point in time. Right. Well, your credit report doesn't say that. Your credit report says your balance at the end of the month was X. It might predict your ability to pay, but it's not necessarily super private at the level of, day-to-day real-time information. So those are kind of the different angles. I don't see, let's set aside credit, I'm just talking about, stale data or age data, and not necessarily even personal. That I think is one body of privacy rights that a consumer is going to want. But the connected real-time stuff I'm personally worried about it, and my data being out there. And I think the regulators are going to focus mostly on that.
Okay. So where do you see the next opportunity in data tech? I mean, meaning if someone wanted to get into the space, right? And knowing what we know now, for example, again, it's not necessarily data tech, but the chat systems, right? With a lot of usage data. There was an opportunity there when WhatsApp kind of lost a little bit of a market share. Right. Where do you think would be the next opportunity would be in the data and the technology space?
Yeah, well, we're spending some time, this is tying into real estate a little bit, but you can expand just generically, is location information. How does that drive people's behavior, people's interests, what their habits are, knowing location information, right? Both about businesses. We're here by a big mall, probably one of the biggest ones in Orange County, probably the most successful.
Right.
There's some people still walking through there, right? But not, and it will be full again, right? And what does it mean to have all that information on the folks that are there, and then potentially tying it into some of the buying behaviors. Again, even anonymized, huge predictors of things for marketing, for sales, for, risk reasons. So kind of, for me, it's all location-based data is super interesting. You might hear the term human mobility data, mobile data, any of those kinds of things. That's what I think is an interesting opportunity in the market. And there's interesting news in the last week around data security related to location information.
Right.
I don't know if you saw the article around Parler's got its own arc of story going on around its membership, but just the tech aspect of Parler and how it was not secure.
No, I didn't hear about it.
Share. I'll share. So what happened is they had an API where people could post against their API, so you didn't have to use their mobile app. You could use your own or build your own. But it was not a super secure one, and there were some techniques in the development of it that allowed people to download all of the information, all historic posts, before AWS shut them down for hosting. And think about that, it could have happened to any fast-growing app in the market, where the security might be trailing a little bit on what they had from a customer standpoint. And you think about how vulnerable, small companies, tech companies can be, and you almost have to go secure first before you build your app. And so anyways, I just find it interesting because it's been in the news recently that companies are going to have to be more and more mindful of data and security overall.
Yeah, no, and I agree. And we see it day in, day out. But if you were giving consumer advice, right?
Yeah.
Obviously with all of the asterisks or whatnot, but just general consumer advice in terms of security and data security. Do you have a 30 seconds
pitch?
These are
Yeah. So just this personal choice for everybody, but I run VPNs at home. I don't allow my kids to just be sitting out on the internet. Run a box. Have tested a couple different things, but Bitdefender is a product I use at home, and it kind of secures all the devices. So that's kind of first, securing your home, securing your online identity. You'll never see me personally post something about my family or my kids. A lot of business, right? We do a lot of business social media, but I'm really uncomfortable with a lot personal, even in a closed network. I'm just uncomfortable with it, and so I'm cautious there. Okay. So it kind of boils down to making sure you got the right tools in place at home. You're safe on your mobile device. You got AV, antivirus on your mobile device, and then be cognizant of where your data actually is. So I use an identity service out there that's monitoring my online identity to make sure it's not getting compromised. And I think everybody should be subscribing to those kinds of things.
Just kind of like the credit score security?
Yeah, any of the identity verification, identity monitoring. A lot of the credit companies have built that into their offering. And companies like LifeLock, as an example, have a lot of tools around that. So that'd be one, but there's several in the market. Just some are better than others, but just having one and making sure you're using those kinds of tools. So that's just the personal side. I guess I don't have as much concern about
business.
No. Yeah, I do about that. But where I was going with like GDPR, right. There's a whole mechanism for people to request companies to purge personal data, their data. So you could call up, if you lived in Europe, in the EU, you could call up, Facebook and say, purge all my data. I don't want, I already deleted my account, but I actually want written proof that you purged my data. That's been in place for years now. I don't have as much stress about that because I think ultimately your identity is going to get, is out there on some level.
Sure.
So I don't know that you can just completely avoid being exposed on some level, and just making sure you're monitoring the tail end outcome that happens when your identity gets compromised so hopefully we're not talking to anybody that's out there attacking us.
I feel like, but honestly, I think that as users, I feel like we sometimes have to monitor the settings, and really I'm talking about the advanced settings of every app that we have. I feel like my relationship with Alexa, it's kind of like that. I don't know if you're familiar with it, but I have Alexa all over the house. And not only, obviously, Alexa is connected to the bandwidth, the internet, right? Now Alexa, and obviously everybody knows that Alexa records the command so they can study from it, and you have to ask Alexa to purge it, or you go to the setting to purge it. But a couple of weeks ago, Amazon rolled out Sidewalk, which I don't know if you've heard of it.
I just read it briefly on it.
I watched it on KTLUs, and that's how I actually realized that I have to go to the setting and check it. And actually, truth be told, it was there, and it was by default enabled with the recent update of Alexa. And it's basically a situation where they're going to take a certain carve-out portion of your bandwidth and going to basically transmit it so people that it's basically their way to compete with wireless network. And create kind of like almost like a social sharing wireless network.
That network with your neighbor if their Alexa app went down or device.
Oh no, but and also the idea is to create kind of like almost like a telecommunication company that enables people to make phone calls through basically Wi-Fi. And the way that they enable it is by sharing everywhere across the globe, if you will, some portion of the bandwidth of the house through Alexa. And I thought it was an interesting initiative, but very poorly executed in terms of default enablement of my bandwidth. They claim it was capped at, I think it was 600 megabytes or whatnot. I don't remember exactly the amount, but like every good medication, you don't know what kind of compromises and sacrifices you're making in the beginning when the tech was introduced. So to me, it was kind of like a funny, weird story. But the point of the story, I guess, is that you need to make a point to constantly monitor your settings of all of the devices that you have, because you may be vulnerable and you wouldn't even know that. So
absolutely. That's scary, because I know there was some word that your neighbor could potentially use your bandwidth with their devices as just a side result of this, and you're thinking, wow, that's scary, because I don't want my neighbors in my house, much less in my network. It's actually scarier for them to be in my network. But there's somebody's coming out with something new. The innovation cycle is so fast on technology right now. I think it's going to be hard for individuals or regulatory bodies or just even watchdogs to keep an eye on this stuff. So, I think it's going to be found by the kind of the citizen, hacking and security community that they'll find these kinds of things. You see devices, something will come out, and it's, what was the latest one where they were shipping back info to China?
TikTok?
No. The SolarWinds breach kind of prompted this one, but where somebody out there detected this slow drip of info to servers in China. And that's how they found, Russia in the case of SolarWinds. And nobody would have found that except for Fire, I think, was the security company that found it. And they found it because they had the software installed in their own shop. And you're like, wow, that's what's it going to take. These big breaches, it's going to take somebody to detect it because you can't test for everything.
I know I'm going off the reservations a little bit, but I'm curious to know. I'm curious to see the first day or the first event where a major event where, let's say, the infrastructure was put down, kind of like the major,
right,
hacking they're trying to do in like different countries in war. So I don't know. I mean, you dread that moment, but I think one day it will happen.
Yeah, like our electrical system or the water.
Yep.
Like we could live without electricity for a day or two.
Right.
We've had rolling brownouts here in Southern California for hours, and kind of like, okay, if I know it's going to come back on, I'm good. Mm-hmm. But could you imagine not having running water for 2 or 3 days?
Well, no, apparently most people are concerned about toilet papers and paper towels, so I don't know about water.
Yeah, right. That's a good point. I'm stocking back up again. That's funny. Yeah, it's interesting how people's mindsets are shifting from this pandemic, too.
Yeah. So what do you, can we talk about some business action in terms of like Home Junction and your business? Is that something we can talk about?
Yeah, absolutely.
So, share a little bit about
what Attom does.
Yep.
Maybe start there.
Yeah, sure.
Yeah. So as a company, we collect about 500 different sources of data, primarily around real estate and property, like the building here. Mm-hmm. In homes, all U.S. based. So we collect different information about that from these 500 different sources. And then we collate it into what we call the Attom data warehouse, somewhat of a older term in the market, but it's basically our big, data repository. And then we build product on it. We operate a handful of consumer direct websites that we work together on that are out in the marketplace. Biggest of which is realtytrack.com. And then we also license that data. This is actually a bigger part of our business now, is licensing the data to other companies like you guys who then turn it into an end user product, right? So we think of ourselves as a bit of the Intel Inside for companies that are much closer to the consumer or the end user like you guys are. And then they're innovating really quickly on top of the data. So that's what we do. We have done a number of acquisitions the last couple of years to build the business, either through, most of our growth is organic, but we've added on a couple of really nice product lines. Some are just add-on data sets. Some are geospatial in nature, that location data I was talking about earlier. And then some are end user tools. That's not a big part of our, strategy, but because we like working with companies that are doing most of that with the end users. But yeah, we've had a nice growth curve for the last 5 or 6 years in the market.
So Zillow has been, I don't want to say struggling, but they had obviously their fair share of issues with their Zestimate.
Yeah.
And obviously it's their home evaluation software or API or tools or whatever you want to call it. And it's been one of the, kind of like the talk of town with Zillow. What's your take on it? How do you, get to a more accurate value analysis? And what's your take in general about this general problem?
Yeah. So Zillow consumerized or popularized the idea of what's called an AVM, automated valuation model. So it's a bit of software that calculates the value primarily of homes. In commercial, there are similar types of tools, AVMs, commercial AVMs. They're just not as widely used. So, but residential, today you can go online and, Realtor, Redfin, us, Zillow, you guys, we all put an opinion of value out there on a property, but it's based on the data that goes into it, right? So, all of the models that you'll see out there, these AVM models, are largely based on closed sale information. So if your neighbor's home sold, your AVM is going to slightly change because now there's more info about the value of your home based on homes surrounding it that just sold. And it's kind of like prices on cars. You can go to True Car today and real time see what others paid.
Right.
It's really AVMs work very similarly. They use data to predict the value of your home based on surrounding areas or surrounding homes. They've been around since the late 90s. I've dealt with these for my entire career, actually. The early models were even earlier than that, where they took an appraiser, like how an appraiser does an appraisal, right? Which for those of the audience that don't know, it's typically find some comps, similar homes or comparable homes, and then add and subtract from the sale price of those homes to get to what your house was worth, right? That's the gist of an appraisal. Well, AVM started out that way. They kind of mimicked what an appraiser did, trying to evaluate like, oh, this lot's a little bit bigger, so I'm going to make your home worth more. The house itself has 3 baths, not 2, so I'm going to make yours worth $10,000 more, as an example. And then over the last 20 years, they've just progressively gotten more accurate and accurate as time's gone on. Part of that's because the data got better. Part of it is the science of building the model itself got better. If I had to weight it, it would probably be 80% of it's because the data got better, and then 20% because the science got better. But they're, now most commercial grade models, not meaning commercial property, but just for pay AVM models are fairly accurate, actually, on vanilla homes.
Right.
So homes that look a lot like the ones around them, which being in Irvine, there's a lot of tract homes, right? Out there, or production homes that are really switchable. Right. The economic principle of substitution, right? This 3-bedroom house on this street, same square footage, it's going to sell pretty close to the next 3-bedroom home, same square footage, same model. AVMs are really good at that, right? Because they can determine pretty well that those are the same model. Some cases the data literally has like the plan name, and it says this is Great Park. I'm going to tell you, I don't live up here, but you know what I mean.
Great Park is good.
Great Park as an area, and then maybe there's a Shea Home community, and then they had the same model in that community. Those are going to look and operate pretty similarly. Where they don't do well is in areas where there's a lot of heterogeneous homes, right? Where it's very there's a lot of variability, I should say, in the home. So maybe a custom home area, or also in really high priced areas, luxury areas, the homes just aren't, you can't do that kind of math. So they show up as very inaccurate. I think the bigger problem, so that's the science and the math. The bigger problem, though, I think, is it's created sort of an empowered consumer. So you guys work with a lot of agents. I know millions of them come in and go, hey, my consumer told me that Zillow said X, or Redfin said Y, or they averaged the two, so they were maybe a little more savvy of a buyer or seller. But it sets an expectation, unfortunately, for consumers on both the buy side and the sell side, based on what is meant to be, and I don't want to say like a rough estimate, but it's just a math-based estimate. It doesn't really reflect somebody looking at the home. So agents end up feeling very like they're working uphill. At times against AVM. So anyways, I'd love to hear what you guys deal with this every day. What do you hear?
No, so we have what we call the set value product, which, as you know, are very well integrated with your AVM. And we kind of took the approach of the range. So it's minimum to maximum with a simulator to show what if you did this, what if you added a garage, what if you painted, what if you put a pool in. We didn't get any negative feedback because I think we created a framework, and also it's more of like a tool that enables you to get another piece of good advice and analysis. It's not necessarily tied to a very popular IDX MLS search engine where I see the property and I see the value in this property, so it's almost like putting a picture of someone I hate. Like it's kind of like in your face. I don't know how to explain it because when you UI, your user interface is more of an analysis interface as opposed to a retail storefront interface. I think the perception of the result is a little bit different.
Sure,
they don't hold us or don't hold a set value analysis as high or as a don't hold it as a I guess a verbatim fact
Right.
as they would if I saw that number on my property with a picture on a consumer site.
Right.
That's kind of like my opinion. But on that note, what do you think would be there's a big gap between commercial real estate and residential with the tools, with the data analysis, with AVMs? I mean, what do you think is I guess the next thing for commercial properties?
Yeah, I mean, well, just first thing is the level of distress in the commercial industry, I think, is going to cause a lot of adoption of tools that maybe they didn't have to pre this downturn, because there's absolute downturn in commercial properties right now. I'd say where commercial's always been really good, actually, is in its understanding of the operations of the building, right? So, we're in a 10, 15 story building. There's data and tools out there that tell the landlord and the owner exactly what this building's doing. Right. Same thing on building operations around things like consumption of electricity and light and whatnot. And so they've always been pretty good about that, even better than residential. But where the data has struggled and the tools have struggled, I think, is in understanding desirability and in some cases value. Value's been really financially driven in commercial. This building X that generates so much in cash flow versus building Y that generates maybe 2 times the cash flow is probably going to be worth twice as much.
Right.
But that's not I don't necessarily think that's going to play out to be true post-pandemic, where things that aren't necessarily in the financials of the building today are getting valued by lessees or companies that are looking at space. Things like outdoor space. You've got a really nice commons area downstairs. There's no line item, I don't think, on your lease that or in your payment each month where you isolate how much you're willing to pay for that. But you'd buy that, you'd rent this building before another building that maybe doesn't have that. So those things like desirability factors are hard to weigh in, which I think residential's done a fantastic job of figuring out. A view property is worth more than a non-view property, or a house with a pool is worth a lot more than a house without a pool. So I think commercial will catch up on those desirability factors. And I, probably going to go through foreclosure issues in commercial and reset values overall, just like every asset class. Okay. That would go through a big recession would have. But it's kind of hard to know what that's going to look like fully.
Got it. Yeah. So for the benefit of social media and social clips, let's go through like rapid shooting questions.
Sure. Yeah.
2021, residential real estate, invest or not?
If you can get a deal, for sure. I think take advantage of rates, investor rates, and if you can find a good property, do it. I'm doing it personally right now. We're in the market looking for more, but be kind of super selective.
Where would you invest in real estate, in residential real estate in 2021?
Yeah. I'm looking at all the areas that are, have become kind of destination workplaces and will probably be for the next 5 to 7 years. So the Colorados of the world, the Arizonas of the world. I think major urban areas, no. I would avoid those unless you have a really tough stomach because there's a lot of exodus from there, just from a demand standpoint. But suburban investment homes with amenities, I think, are good options if you can buy it at the right price. Okay. And you can get the right financing on it.
Same question. 2021 commercial real estate, invest or hold off?
Yeah, I'm not super close to this space, but I'm certainly. I mean, I've done a little. I'm not doing any this year. I think there's a reset that you'd rather just let it play out. Somebody who has a stomach for it, though. We're starting. We track foreclosures. We're starting to see foreclosures uptick heavily because there's no moratoriums there in the commercial side. So there's going to be opportunity. I just saw it's the Hilton Times Square property owned by a local to here hotel REIT called Sunstone. They gave the keys back to the lender last week.
Wow.
And you're starting, this was a
Is it a Hilton?
It was the Hilton in Times Square, New York, that they shut last year during the pandemic, but it was valued at $250 million. The note was for, I want to say 47, and they handed the keys back. So in their minds, it wasn't worth $47 million.
Wow.
So, I'm sure there's more to the story, but
Sure.
but that's the type of thing, opportunity-wise, somebody with, a strong stomach, and obviously not that scale, but strong stomach could take advantage of. But that's not me.
Okay. I know the next question is a little bit loaded, but I mean, because it's mortgages, right?
Yeah.
The next 2 years, refinance or not, rate same or higher?
Rates are definitely higher. We're anticipating rates later this year to go up. You were starting to see even Wells Fargo's economists and some of the Fannie and Freddie economists come out and say next year you could see a point up. I don't know that I see the driver of that. I think that's assuming a great economic recovery, which hasn't. We're not sure that's going to happen.
Right.
But definitely right now is low. So I'd say refi, if you can get your hands on it. It's starting to go up the last couple of weeks. So if you can get your hands on a good loan, certainly do it now.
Okay.
Yeah.
List all of the data security softwares that you think consumers should pay attention to.
Sure.
Let's start with that.
Okay. Yeah. So we're talking consumer grade.
Yes,
right?
consumer grade. Yeah.
So I think getting a home VPN is critical. I think having some sort of device to monitor your traffic. I have two teenage girls, so I monitor traffic. I use a product called Bitdefender, which allows me to do that from a mobile phone. As long as you can get comfortable with the Big Brother aspects of that, I'd recommend that. Identity monitoring and verification. Same thing on the credit side.
What is a good company you recommend?
Well, there's a couple that I'd point out. A company called Identity IQ is a really good product. LifeLock is in that same space. Intuit sells a product, so you can look at intuit.com. They sell a very similar product. And these types of products are often bundled with other security products like password managers. That's probably the other one I'd add on the list. It's just something to manage your passwords.
Got it.
Yeah.
Okay. Thank you for coming, Todd. It was really a pleasure, and I think we should do it again.
Yes.
With the way the data and the way that the big guys, the big four, the tech companies are playing with data, I think we're going to have a lot to talk about in the next couple of months.
Yeah, absolutely. Thanks for having me.
Thank you.